Hello and welcome back here on The Hour. My name is Elias, and in today's video we'll again cover some interesting news and happenings out of the finance and crypto space. Please do not make financial decisions based on my opinions and my information. Always do your own research. And with that being said, let's jump into the video. Alright, as always, we want to start on CoinMarketCap. We see red numbers, and it's actually funny why we see red numbers. Because yesterday was actually a good day we would have to say it was a good day for finance, because the Federal Reserve paused the interest rate hikes. Now, what does that mean? That means when you want to take a loan, you have to pay a certain interest on the bank. And the bank gets their loan also from the Federal Reserve, from the big father of all money, the National Bank, right? And the National Bank also has an interest rate on their money, which banks have to pay if they lend out money from them. That depends then how much interest you pay to the bank. And the lower that is, the easier is money to access in the market, right? And the easier money is accessed, the more money can flow into financial markets. The more money flows into financial markets, the more prices surge up. This is the theory, and practical, it seems to have its consequences on the market, because every time we see an interest hike, we see tendentially that we go lower in price. But not this time, and the reason for this market crash we see over the past few days is actually an interesting one, because you may ask yourself, why did the crypto market fall despite the rate hike pause? And in this article, they also talk about the S&P and so on. But my point, which I want to cover, is when we look at previous recessions, and recessions are times where we go way down in price in all asset markets. And that's obviously a question, is crypto something which is working against the traditional asset market? So in terms of a recession, we go up in crypto. We don't know it yet. Crypto never saw a recession before. I think not, because crypto is also an asset class. People believe, or crypto or Bitcoin investments or hope investments, they think, let's buy now and sell later, or at least 99% of people do. The other 1% are the Bitcoin maxis who say like Bitcoin is the only thing which is good and everything besides that is bad, and we want to go out of finance, detach ourselves from the traditional asset market. But this is just really 1%. And in terms of a recession, money is completely losing its value, and I think this will also have dramatic consequences for the crypto market and especially obviously Bitcoin. And the reason why we went down now is because, just to summarize it, we had a stop in interest hikes, so we call that a pivot. So Jerome Powell said we're pivoting, we stopped the hikes for now, and actually in the past this was a sign that we're heading closer and closer to the recession. Therefore, people sold their assets because they want to say, hey, I want to go out of a volatile asset because this asset will most likely drop the hardest or the fastest in terms when we really go into a hard, bloody recession. We only see that, and we don't know how it will play out this time. I'm a big believer in what happened in the past will most likely also happen in such a form in right now or in future events. And so I think here. But this was actually a quick one. So we see actually quite crazy drops. So over the past few weeks, we already saw major down movements on Bitcoin. We will go into the trading view chart in a bit. But we saw a lot of bad events also happening. And it's funny because when we talk about crypto, we always see the bad events and the good events happening in a very close period of time. So we saw the SEC filing against so many major companies, and everything happens at once. And now this. So it's really a sign that we get pushed down from the outside, and it's not like the intrinsic value of Bitcoin is losing in value. So therefore, if you have hodl positions, that's actually the only thing that I want to mention. Just hodl it, and if you have trading positions, it's probably not the best time to trade the markets. But regarding trading, I want to quickly talk about Uniswap V4. So Uniswap announced 2 days ago that they will publish a V4. So as you know, the V3 model, which they had also licensed over a long period of time, was super successful. And the V3 model was just a concentrating liquidity model, which they implemented on their decentralized exchange. They also launched a mobile app. So I think Uniswap is a great example of a company which is building in the bear market. I saw that they also recently just raised another amount of money. So that's really a good sign for a company, and I am personally very bullish on Uniswap also for the next bull market. So the next V4 V4 model is a lot about hooks, they call it. So just more kind of commands you can do in certain interactions with Uniswap. It's super interesting for projects to build on Uniswap, to use Uniswap in more kind of situations or more kind of utilities that you want to offer to your clients. Also, we have a protocol launching which is closely working with Uniswap, or better said, another protocol which is actually aggregating Uniswap. So that's a cool update for us. We're really hyped about that. I would highly recommend you right now, especially to inform yourself more about DeFi and the other applications which get pushed out in a bear market, because these are exactly the applications which will then get a massive boost in the bull run. Exactly. I would highly recommend you to read through the white paper. It's actually a quite easy read. I was surprised. It's only 3 pages, and compared to, for example, the CRV USD white paper, which is like 8 pages or even more, it's super complicated, also mathematical. The Uniswap paper is super easy to read. So great work from Uniswap here. I'm super bullish on Uni, and I also bought myself some more Uni tokens. Exactly. When we look at Bitcoin, we're not in that range that we talked about previously. We're talking about these 400-day ranges around the halving, which historically were good buy-in positions, and obviously the dollar cost out positions in the bull market right here and also right here. Good gains to be made, and I think this will not be different this time. We're heading down lower and lower. As you might know, I said I think the low is in. If we quickly just check out, so if we drag that, wait, let me do it again. Let me quickly check from the end of the 400-day time frame to the all-time high. I think we're a bit too early in, actually, in terms of this all-time high. Yeah, if we check that, it was obviously a different kind of percentage movement, but we see that the all-time high over here set in quite early. So we saw a huge surge to the upside. As you saw here, historically it was quite later. Obviously we had a longer uptrend over here and also a more sustainable, I would say. But it's interesting. I'm still dollar cost averaging in. I think it's a good time to dollar cost average into the market right now, and especially over the next 400-600 days. So with that being said, I think we're already at the end of this episode. 10 minutes are over, and I wish you a nice rest of your week. Much success investing, and always keep a cool head. Don't hype or FOMO into the market right now, or FOMO out of the market right now. Don't sell your positions in massive minus. Rather hold them for the next bull market. With that being said, enjoy the day, and we see each other in the next video. Bye bye.